What is KCB SME Division's mandate?
KCB SME Banking is actually one of the segments within business banking of the bank. We have significant recognition of the role of SME banking, and as a bank, we deliberately started this segment to be able to take care of the needs, financial needs and services of the medium and small enterprises cutting across the whole country. And this has actually given us a lot of output from the time we rolled out in 2008. We've seen the sector significantly grow up to today's level of 120,000 customers with quite good deposits that have been kept in the bank to the tune of close to 25 billion bob.
What products do you offer to SMEs?
Well, we do have various value propositions for SMEs that cut across, financing into as well as transactional banking. We have customized products for the traditional products for the small and medium enterprises. On loans, we have their need of working capital. We have that particular product to be able to take care of their working capital needs. On the other side, at times they want to be able to enhance their machinery, their assets. We do have asset-based finance and term loans that can be able to avail the much needed capital to be able to boost their businesses. Or day-to-day running of a business, through the business cycle, they interact with various corporate entities and government institutions. That way they need working capital to be able to bridge finance, to supply their merchandise, to supply their services to these corporate entities. And KCB has designed a specially purpose vehicle to be able to enhance that for the SME. And this is branded the KCB Suppliers Credit, which cuts across right from the tender bid issuance to the customers up to as well issuing the real money, including invoice discounting. On the side of their turnovers of business, we look at their business assets, and we are able to look at the turnover of the business between 3 million shillings to 120 million shillings per annum. And that is the threshold that we've demarcated the SME from the micro and from the corporate side.
How does the increase in lending rates affect SME banking?
The increase in lending rates, among other macro variables and micro variables in the country, like interest rates going up, high levels of inflation, looking at the price hikes of key inputs or primary inputs for SMEs like fuel, like electricity, have had a big impact to the SME customer. This has translated, of course, to also impact on the financial service provider like KCB, because the uptake of loans has seemingly become not easy to access. The price levels are quite high for the customer to be able to really meet their other overheads plus finance costs. So we've seen a trend where the business customers will not be able to access the much needed capital adequately. They'll only be able to go for what they can afford. But we expect, of course, that to be able to come down. This is a short-term problem, the way we see it in the bank. Of course, this has come as a myriad of other variables, which included, of course, the turbulence of the Kenya shillings against the hard currencies, and that has again directly affected the SME customer and financial institutions. How we see that translating and affecting the customer is that they are unable to import. Most of the SMEs in the country are skewed actually to trading because they are able to import cheaper goods from manufacturing countries like Asia. We are talking of countries in Asia like Malaysia, China, and India, and they are able to sell those goods and merchandise quite competitively in the Kenyan environment and other parts of the countries where KCB is operating. How does this then affect the SME? We are killing some kind of innovation because the local manufacturers are unable to actually manufacture. That is where mostly the SMEs have been affected. The overheads for labor, on top now the high cost of the dollar, the high cost of inflation. I mean, there are levels of inflation and price levels have impacted very negatively to these SMEs. But as a bank, again, we are there to rally with them and support them as our partners to be able to go through the turbulence.
What are you doing to help SMEs facing challenges?
SMEs in Kenya, I must say, the biggest challenge they have today is both external to them and internal to them. And I'll start with the external challenges that they're facing. They don't have reliable, absolute market for their goods and services. They have very innovative, they are entrepreneurs, but when it comes to the market of tech, you find it's a big challenge. Most of the SMEs start a business plan with the intent to be able to give the innovative goods or services, but you find the market is a bit constrained. That's a big external challenge. On the other side, when we look at really the unstable, or what I can say, a stable economic environment, it's not quite conducive for business because they are unable to even manage their cash flows and plan ahead. Today you plan like this, tomorrow you find the shilling has just shot up. You plan to be able to buy this produce at this, Kenya Power announces, today you are paying power bills at this level. So you find the external environment, economic environment, is not very conducive for the SME. That impacts their success and growth. The other key area I'm seeing SMEs having a big challenge, internal to them, is actually, I'm looking at their ability or their capacity to run their businesses. Most of the orientation of most of the SMEs in schools and colleges, the curricula they went through was actually more academic. The culture of entrepreneurship is not part of them, so they learn it as they do it. That has been a big challenge to the SME in being able to manage the challenges an entrepreneur goes through in business. And we are seeing that as another gap that, partnerships or, the banks can come in quickly to be able to see that gap and make the SMEs being able to embrace more conventional ways of doing business and being able to manage the challenges in running a business.
Why is it important for SMEs to go online?
We are seeing a business who has gone online getting more advantages to be able to access to access markets. As I said earlier, you find market is a big challenge to SMEs. They'll be able to talk to other SMEs. They'll be able to sell their goods online. They can be able to advertise themselves. We are looking at this SME also being able to learn some of the good tools which are online to be able to improve their businesses. For example, when we look at some of the how-to tools that have been developed, you find they can be able to tap into that and use that to improve their business without necessarily having to go to class while they are sitting actually in their business. So online banking, online kind of engagement for any small business is a path to success.